You also pointed out that every time silver gets pushed back down into this $60 range,
Something
there's
happens.
persistent buyers. And what does that tell you about the underlying characteristics of this market?
Yeah.
In other words, who appears to be exerting greater control here? The sellers attempting to force prices lower, or the
Mhm.
buyers patiently absorbing this supply beneath the market?
Well, obviously, the buyers, when they buy it in the 60s, aren't afraid of the daily price action. Most people are ripping their hair out and screaming. Instead, they're saying, "I'll buy some of that. I'll buy it. I'll buy it." And they obviously buy it enough to where, you don't stay down there very long in the 60s. You stay down there a week or so. Next thing you know, you're back up. We're arguing that if they can't do it this time, like literally take us into the 50s, like tomorrow, very soon, okay, the clock is old for them, intermediate basis. Monthly momentum is very old. You've not you've not really made any money versus where you were in January. And let's see it then. Okay. And if not, this next rally up is going to be different than the other rallies we've seen up from the under 70 in silver or in the low 400s in gold. This one's going to be different. And I think it's going to be different in that when it goes up, there'll be a point at which, well before you get up to 90 or 100 again on silver, but somewhere in the 70s and 80s, where you're going to suddenly explode up out of this hole in a way that the people who doubted it won't have a chance to reposition. And that's been true. If you look at silver going back a couple of years, there have been plenty of these times where you've had large percent drops, and we've kept cautioning, no, the long-term momentum is not being damaged. And the problem is if you did get out at those times and felt smart, if you didn't get back in very astutely, you bought it, you got back in at a higher level, or you missed it. I think that's the condition we're in right now. That's a top. That's a bottom. Right now, we don't have any structural damage to long-term trend. Therefore, we have to treat this as an intermediate trend congestion, violent congestion correction phase, period.
Michael, I've followed you for a long time, and your track record is fantastic. I can remember many walks during the pandemic, living in Minnesota, bundled up, walking this long walk that I had, listening to things you were saying that have been remarkably accurate. And I think you know where I'm going with this one. I can't let you off the hook because you've written that your longer term target zone for silver remains between 3 and 500. Man, I've talked a lot about this on my podcast. It's a glimmer of hope for all of us who have held strong fingertips, held on to silver. And you say that it breaks through this level once it breaks free from this prolonged congestion pattern you just mentioned. For those people who believe that such a move sounds impossible, what lessons does market history offer about how quickly prices can reveal or revalue once a market escapes this long-term trading range and enters a true price discovery phase? What I'm getting at is, are you still strongly believing that $300 to $500 range is possible here soon?
Let's just look back, for example, at the 50-year range silver's been in, between $5 on the bottom side and $50 on the high side, back and forth for 50 years. Okay. And back in early 24, when price of silver was coming up to $25, it had already been at 30 in 2020. But in 24, it came back up to 25 again, approaching the top end of that zone. And we said, okay, you're going to start to gush now. And once it got up to 35, we found some resistance there, not at the $50 level again, at 35. It prevailed for several quarters. And the third attempt to get back up there, 35 one time, 35 another, and then the third attempt, we said this time it's going to take hold and gush. Well, we went up and blew out the all-time highs at that point. And in November, we put out our last long-term buy signal, priced in 56, just barely above the range highs, and said, okay, we're now entering the massive acceleration phase in silver. There will be a correction somewhere in the middle, not necessarily in middle of price or middle of the clock necessarily, but somewhere in this process of going to 3 to 500. You're going to find a correction. It'll probably, scare people. We didn't call the top at 120. It came in literally 1.5 days. You dropped from 120 to 64. Okay, so it was hard to call. But we still assess it as a correction in the middle. But our assessment now is using some historical archives. Copper did the same thing that silver's been doing. For many decades, it was caught between 50 cents and a buck 50, just asleep, decades. Late 2005, it finally ate its way up through the $1.50 ceiling. And within several quarters, with a correction in the middle, it reached $4.10. Boom, off the page vertical. And then lived in a new reality for the next decades, an average price of about $3 to $3.50 as opposed to an average price of a buck. Okay. And now, of course, it's $6.30. Okay. So it continues on. Lead did the exact same thing in 2010, not in sync with copper, but on its own, without headlines. It had a range that prevailed for multiple decades. And when it took it out with a jiggle in the middle, it quadrupled in price in several quarters. Okay. A new reality.
Michael Oliver says the stock market has been peaking for over a year. He warns that the biggest danger might hit later on. He also believes that rising trouble in the bond market is a major risk that most investors are ignoring. Eventually, this stress could force central banks to step in and help. When it comes to silver, Oliver looks at market momentum instead of short-term price changes. He highlights key technical levels that could show when silver's current flat period is ending. People who agree with him note that silver has refused to drop further despite several drops, proving its hidden strength. They also point out that other industrial metals went through similar show periods before their price surged. From this point of view, the recent drop in silver is just a temporary scare within a bigger upward trend, not the end of the strong market.